Hey traders, welcome to this week's brand new global stock market review. We're going to be looking at the best stocks to buy now and also the best stocks to sell now heading into a brand new trading week. And we're going to be doing that first off by kicking off with the global indices. Then we're going to drill down to the sectors in the US. And then we're going to go and look at some individual stocks at the end of the video, which are ranking as some of the best long and short ideas in the US stock market going into next week. Okay, so if we jump over to the list view here of the global indices, the first thing to note is the VIX. The VIX is sitting right at the top of the leaderboard here, and the VIX acts as a risk on, risk off trigger within the hedge dash algorithm to give us an overall bias of whether we should be looking to be bearish or we should be looking to be bullish. Now, generally speaking, because I know the VIX is specifically for the S&P 500, but if volatility in the S&P 500 is rising, you tend to see all of the US indices falling. And at the same time, you tend to see global indices tracking those as well. And vice versa, when you have lower levels of volatility, you tend to see all of the indices in the US rising, and it's bullish. And you tend to see global stocks also responding. They tend to all move in lockstep, although they can do their own things. But generally speaking, the VIX will give us our general bias going into the week here. And it is currently outperformed to the upside. And that tells us we should be focused on shorts as a preference in the indices, especially in the US. Now, if we scroll down here, you can look, essentially we're in the portfolio selection part, very similar to what we do in the weekly Forex forecast, which was posted yesterday. And you can see three of the top markets to the upside in the global indices are the Nifty, the ASX, the Dow Jones, and also the TSX. Now, we won't be looking at the IBEX today, but I do want to look at the Nifty, the ASX, the Dow Jones, and the TSX. We will also be looking to the short side, the Nasdaq, the Nikkei, and the Kospi. And I'll also put in, of course, the Russell, the S&P, and we'll look at the DAX as well, just because I know many of you like to trade those indices. So we'll put those into the video as well. Now, what I want to show you here is how the stocks video really leads on from the Forex video yesterday, because the currencies affect the indices as well. Now, it's not a coincidence that yesterday we were looking at a weaker Australian dollar, and we're seeing the Australian index as one of the top long ideas, because as the currency depreciates, this is bullish for the indices. And likewise, we're seeing the Canadian dollar as one of the top shorts we should be looking at heading into this week. This was outlined in yesterday's Forex video. And now we're looking at also to the long side, the Canadian TSX. This is one of the top long ideas going into this week. But just remember, on an overall basis, because of what we're seeing with the VIX, which is our volatility trigger within the watch list that we're looking at, I favor shorts heading into this week, and the long ideas in the ASX, in the Nifty, and also in the TSX really are something we can look at using reactively if we don't get the shorts, if we start to see markets coming down, or even you can look for the shorts in the weaker indices into their lower bounds, and then you can step in and look for potential buying opportunities in the stronger or the outperforming benchmark indices. If you didn't see yesterday's Forex video, you can click the link and you can watch it open up in a separate window, and that will give you some good context around the currencies which are being supportive of their indices, and also like the Nikkei, where the Japanese yen is one of the top, it's actually the top long Forex idea going into this week. That is adding downward pressure on the Nikkei and makes it one of the best shorts in terms of the indices this week. Okay, so kicking off the indices then with the Nasdaq. The Nasdaq, out of all of the global indices, is my top short and my favorite short idea going into next week. We're on the 4-hour chart and we have exactly the same setup as the weekly Forex forecast. And if you want to know more about the levels, if you're new to this, maybe from the stock side of things, then you can click the link and you can watch the weekly Forex forecast strategy video where I outline exactly what these levels are and the strategy that we're using. It works exactly the same with stocks, and you can get everything you need about what these levels are for the stock markets in that weekly Forex forecast strategy video as well. So with that said, what I'd like to see here in the Nasdaq next week is you can see the main thing here, we have failed to take out the prior high, and this is setting up a potential major reversal. At least when you fail to make a high like this, very often you come down to the prior low. And then, if it breaks with momentum, that tends to be a much bigger reversal. If it kind of chops around and holds, that can actually set up, a corrective move, that kind of ABC instead of a 1, 2, 3, and you can start to move higher. Just simply going into next week, I only can be short the Nasdaq. I cannot buy it. And what I'd really like to see is I'd like to see the Nasdaq pulling back and breaching the 19,076. And if we trade above this level next week, especially if the moving average comes down, we start to push into it. This is going to be a place where the Nasdaq becomes overbought intra-week. And very often, especially when you get this first reversal, this kind of pullback into here, that sets up a wave too. So if we are going to come down, take out the low for a much bigger move, we could very easily see this kind of second wave setup. That is exactly the same setup as I traded with members in the GMT members area with the S&P 500 on the prior sell-off on the Japanese yen carry trade. So this is what I'd like to see coming into next week. I will be looking for 1 or 2 days down. I do think if you can catch it above the 19,076, you could probably hold on to this all the way down for the prior low, in subsequent weeks. The second thing, of course, you can look for is if we pull back, and this may just consolidate, it may just pull back and the moving average catches up with it, then you can look for that bear flag sell-off from the moving average into the lower bound at the 17,766.31. Once you start to trade below here, intra-week, you become oversold. So below here is a great profit-taking opportunity for any kind of bear flag setups or any kind of shorts in this asset intra-week next week. And the third and final thing, as always, if for whatever reason we break through the 19,076, so those are the two primary setups, but if we break through as a kind of emergency level, the 19,731.29 is where the Nasdaq becomes extremely overbought intra-week. And it may be the case that if we get here, I'm already short once. So it pulls back, I short it, it breaches this, pushes into the 1973.29, it becomes extremely overbought, and I would be using that as an opportunity to short and cost average that first position. So again, these are the exact setups. If you're new from the stocks side of things here, this is the exact same setups that we look at day in, day out with GMT members. Next is the Nikkei. This is my second favorite short heading into next week. And remember, based on what we looked at with the volatility index, we have generally, or I have a bearish bias going into next week on indices in general. So this is the second top short I'll be looking for, and again, you can see this big sell-off. And remember, this was when the Japanese yen carry trade unwound. As we get that rally in the currency, we start to see deflationary flows coming into the stock market. It weighs down on the stock market. So coming into next week, we are looking, based on yesterday's video, at further yen appreciation. This is going to be net negative for the index. And what I'd like to see is I'd like to see the index pull back, breach the 37858.51, trade into, you can see how it crossed its moving average, crosses over, pulls back into it. This would be a great setup for 1 or 2 days down. That's, really my own mandate of trying to capture 1 to 2 days within a trading week. However, you can see the structure here very similar to the Nasdaq. We've got this correction, and this looks like the first move down. Well, if this is the first move and this pulls back and we become overbought intra-week, that very easily could also be a second wave opportunity where, you short, you hold on to it, and once it breaks the low, you get the much bigger sell-off. So I'll leave that to you guys, but certainly on a short-term basis, I will be looking for 1 or 2 days down from above 37,858.51, given the opportunity next week. If we break through here and we breach the 39,325, this is where we become extremely overbought intra-week, and this would be the second place I'd be looking for 1 or 2 days down in the Nikkei. And again, usually when we take out these levels, it's very rare. They're backup levels, and I'm probably already going to be short an asset in that case, and I'm usually looking at risk managing it. If you're not, and it takes out this level, it's a great first entry because you have roughly a 9 out of 10 chance of reversing back inside that kind of range by the end of the week. So the third thing you can look for, of course, is if we fail to really pull back and test the upper bound, which is really my preferred setup. But if we just kind of consolidate and the moving average instead catches up with price, you can look for that kind of break, pull back into the moving average, and you can look for that sell-off down to the 34924.42. Okay, so the third best short idea in the global indices next week is the Kospi. Now, the Kospi is a global bellwether because of its exporting nature. And so the fact that the Kospi is really underperforming, this is one of the key signs, not just the VIX, but it's one of the key signals within the global indices that are telling us we really are seeing global risk off. It's not just in the US, we're seeing the Kospi really underperforming. This is a sign of a fairly unhealthy global economy when you see the Korean index underperforming. So any pullback in the Korean index, you can look for a pullback into the moving average. And again, 30-period moving average we're using here. Above the 2638, this index would become overbought intra-week. And this would be the area to look for 1 or 2 day reversal to the downside. If we fail to do that, and instead, again, we just consolidate like this and the moving average catches up to it, again, you can see that's the first breakdown below it, very much like this, pulls back into it. You can look for that kind of pullback into the moving average and the sell-off into the 2449.68. That is the weekly lower bound, where if you take that out, there's a very good chance that you start to lose steam to the downside, and it's a good profit-taking opportunity. And the third and final thing I'll be looking for is if it pushes up and you're involved from the 2638 and it blasts through here for whatever reason, some unexpected catalyst, and we take out the 2733.46, the Kospi becomes extremely overbought intra-week, and that gives you your second opportunity or second place you can step in and short, whether you're already short once or not, whether it's an initial position. Okay, so moving on to the long side then, it's really the Nifty out of the three that we're going to look at that I favor the most, especially if you want to take outright positions and you're not hedging them. The Nifty is the best long idea, but just remember, I favor shorts. So those short markets are actually my preference going into next week. But if you are looking at trading the Nifty, I would be interested only in buying. I would be looking for a pullback, and I'd be looking for this to breach the 2447.408. This is where, and you can see a nice stair step into the prior high over here as well. This is where this market would become oversold intra-week. And below here, you could look for that 1 or 2 day reversal to the upside. If we start to make our way back towards this level and it doesn't quite breach it, and instead you get the breakout intra-week back above the moving average, you can look for it to settle into the moving average, and that gives you your nice bull flag into the 25230, but also I would imagine back into the prior high. And of course, as a backup plan, let's say you get involved down here and it breaches this and pushes down to the 24096. This would be the second place you could look for a 1 or 2 day reversal, because the Nifty would become extremely oversold intra-week below the 24096. Next is the TSX. Now the TSX has already crossed over its moving average. Look at that. So I wouldn't be surprised to see it coming down to the 22388.73. If you are looking for long opportunities, I think this would be probably a better one than the Australian index, just because we've made a new high here technically, whereas in the Aussie it looks like we're actually failing to make a high in the ASX, the Australian index, and that is a risk, because if you buy into it and it starts to reverse lower, you can get a steeper move, as we'll see. So coming into next week, in terms of the TSX, I would be looking for this to continue lower. If it does and it breaches the 22388.73, you can look for a potential buying opportunity for 1 or 2 days up. If we start to make our way down towards the lower bound and instead we get the market crossing back over its moving average, and you get the moving average turns up, you get that kind of bull flag set up into the 23174. Those are the two things I'd be looking for. And if it breaks down below here, let's say it breaks down, you take a long entry and it comes all the way down to the 21996. This is where we become extremely overbought intra-week. You can look for that 1 or 2 day reversal down here. And third best long idea next week in the indices is the ASX. But you can see the one thing I don't like about this is that we failed to make the high over here. And this could potentially be a one wave. Now the issue I have with this is if you step in and you buy this, even though it's one of the top outperformers, if you step in and buy this at the 7863 and this starts to break down and we come and take out this low, we're into a potential third wave. And if you're on the wrong side of a third wave, especially if you've just got an outright position, that's when you can take a bigger loss. So going into next week, if you are looking to buy the ASX, perhaps even the TSX, maybe even the Nifty, but if you are looking at buying those indices, consider hedging them by shorting one of the weaker assets as well, because on balance, at least if they both go down, you can make money on the spread. Let's say the Nasdaq sells off harder than the ASX, you can make money on a spread trade. If you don't know how to do that, again, we do cover that in the GMT trading course. All GMT members have access to that. So any sell-off below the 7863.93, this is where you can look for a 1 or 2 day reversal to the upside. If we start to make our way down towards here and the ASX crosses back above the moving average, you can look for that kind of bull flag setup into the prior high and onto the 8162.86. And if we break through here and we take out the 7714.47, this is the second place. I'd be looking for a potential 1 or 2 day reversal to the upside, potentially even cost averaging any initial losing position from the first lower bound. So if you're not sure, again, how to put spread trades on or hedge, I would focus for the outright positions, I would focus on the bearish indices and for those short opportunities over buying into the ASA. Okay, so wrapping up the global indices then with the other 3 US markets, and we'll also look at the DAX. And we got that VIX signal switching to tell us to turn risk off in the indices right here. And I did put the data in a previous video during the week to show you, when that VIX triggered in the Hedge Dash algorithm. The last time it did it before that was right over here. It picked pretty much the July high. So I do think we're going to get continued weakness in the S&P 500. That's what the quantitative data is suggesting still. Any pullback in this, I would be looking for this market to breach the 554762. We become overbought intra-week if we do that, and this would actually be a potential, you can see this kind of double top pattern over here, or it could even, looks even a bit more like a triple top, but this would even potentially be a second wave, very much like, and it was right here, this is where I shorted this with GMT members in real time, this pullback, we sold off, we pulled back, and I shorted it right here. It was from the weekly upper bound. So don't be surprised to see the S&P 500 take out the weekly upper bound for the next big sell-off to the downside. Now you can look for 1 or 2 days down, or you can look to hold, for a much bigger move down. The next thing you can look for, of course, is if we start to pull back, but instead of taking out the upper bound, the moving average kind of catches up with it, then you can look for that kind of bear flag setup into the 5269.21. And as always, the final thing you can look for here is if we breach the first upper bound and we push into the second upper bound and take up this high, again, very unexpected, but if we get that unexpected move, this would be the second place above the 5686. I would be looking for a potential 1 or 2 day reversal in the S&P 500. Next is the Russell. We've already broken down below the moving average. And again, we've got this setup where if we pull back, kind of intersects the moving average, and above the 216815 is where we would become overbought intra-week. That's where we enter the sell zone in the Russell. That would be the opportunity. I'm going to be looking for 1 or 2 day reversal to the downside. If for whatever reason we blast through here and take out the 2244.89, this is the second place. Whether I'm short or not from the first upper bound, this would be the second place I'd be looking for a 1 or 2 day reversal. And if we get a fast market and instead of taking out the upper bound, we pull back, we just start to consolidate into the moving average. And very much like this, we break it, we consolidate into it, and then you get your kind of bear flag setup that you can look for down into the prior low. And in this case, could easily be coming all the way down to the 2014.66 within the week. This is the level for the week to the downside. Next is the Dow Jones. Now the Dow Jones actually one of the best performers out of all of the US indices. So it's the last US indice I would want to short. First I'd want to short the Nasdaq, second I'd want to short the S&P, then I'd want to short the Russell, and last, and in this case least, I'd want to short the Dow Jones. So any pullback in the Dow Jones, you can look for it again to consolidate underneath its moving average. You can look for that bear flag sell-off into the lower bound at the 39437. What I would like to see is I'd like to see this pulling back, taking out its upper bound at the 41253.46. We may even take this out and make a new high. Now, if we do that, I would still be looking for a 1 or 2 day reversal to the downside. But it does just go to show, if you're making new highs in the Dow Jones and not in the others, better to step in and short the others before the Dow Jones. But if we do break through here for whatever reason and we take out the 42161.51, this is the second place I'd be looking for a 1 or 2 day reversal, as we would then become extremely overbought intra-week in the Dow Jones. And finally, the DAX. And the DAX is pretty much a neutral market, but on balance, because of my bearish bias on indices, I would be looking for shorts. Any pullback in the DAX, I would like to see it intersect the moving average, take out the 18746. That's where we become overbought intra-week. And again, you've got a kind of small double top over here. Retest the prior low, and that would be a good opportunity for 1 or 2 day reversal. If we break through here and we take out the second upper bound at the 19190.71, it's the second place. If I was short here, I'd be looking to take a second position to cost average. That would be the second place I'd be looking for a 1 or 2 day reversal in the DAX, because we become extremely overbought above this level. And of course, we might just consolidate. We started to cross it. We might just consolidate, start to hug the moving average, and then you can just look for that intra-week sell-off down to the 17857.49. Okay, so dropping down from the index level in the US to the sector level, we know that generally speaking, we're seeing heightened volatility. We should really be looking at having a bearish bias in the US indices. Now, dropping down to the sector level, we can see the outperformers to the upside, XLRE, XLP, and XLU, and this is very much portfolio selection before we go and look at some individual stocks. But notice to the downside, XLE, XLK, XLB are the standout three to the downside. So those are the top six in terms of to the long side and the short side. But those internals are also giving very risk-off signal, because when you've got XLRE outperforming, XLP, defensive sector, XLU, the most risk-off sector, outperforming, that gives an indication for the index itself that we're most likely going to see a continuation lower. So it's not just the VIX, it's also the internals of the stock market are pointing towards continued risk off. And if you go and have a look to the downside, of course, in yesterday's weekly Forex forecast video, we highlighted crude oil as a very good short, and XLE, the energy sector, is the top sector to be looking for shorts in the US stock market next week. And alongside that, we'll also be looking at XLK and also stocks within XLB. Okay, so kicking off with some oil stocks, because I do have a bearish bias at the index level, and on the sector level, XLE is the top short going into this week in the hedge dash algorithm. Halliburton is a market which is trending nicely to the downside. We had this kind of breakout here from this consolidation. So any pullback in this market, what I'd be looking for is I'd be looking for a breach of the 29.83. If we break above the 29.83, we become overbought intra-week on a market that we should be looking further declines in. And that would be where I'd be looking for 1 or 2 day reversal. If for whatever reason we break all the way up to the 31.07, whether I'm short or not, this would be the second place I'd be looking for a 1 or 2 day reversal in Halliburton. And of course, if you start to pull back and you just trade into the moving average and you consolidate, you can look for that kind of breakout and bear flag setup into the weekly low bound 27.34. Next is Oxy, another XLE stock suffering from that sell-off in crude oil. Really nice momentum to the downside. And again, another kind of consolidation breakout. You can see this kind of wedge pattern forming, which we've now broken out of in this stock. So any pullback in this asset, I'd like to see it breach the 53.83. If it does that, I'm going to be looking for a 1 or 2 day reversal to the downside in this stock. If we break through here and come all the way up to the 55.64, this market becomes extremely overbought intra-week. And that would be, whether I'm short or not, the second place. I'd be looking for a 1 or 2 day reversal. And of course, if we just correct, we don't make it to the upper bound, you can look for that trade into the moving average and that kind of bear flag breakout down to the 50.22. The next stock we're looking at is Micron. It's in the Nasdaq. It's an XLK stock, so I can either be short or do nothing. You can see we are selling off. I'd like to see this market pull back next week, breach the 94.06. We become overbought intra-week, probably close this gap here. This would be a great place to look for a 1 or 2 day reversal to the downside in Micron. If we break through here for whatever reason, as unexpected as it is, but if we break through here and we take out the 101.74, this is where I'd be looking for a 1 or 2 day reversal to the downside as well, whether I'm already short and risk managing it or this is just an initial position. And the third thing you can look for, of course, as always, is if we start to pull back and we break down before taking out the upper bound here, you can look for that intra-week sell-off, bear flag setup into the 78.69. Next is LRCX. I like this to the downside. It is ranking very low in the hedge dash algorithm, so it's making it a top short. And I have that bearish bias specifically on the Nasdaq, so looking short not just the Nasdaq index, but also, XLK and the individual stocks that we're looking at. So any pullback, if I get the opportunity to short this above the 780.25, this is where I'm going to be looking for a potential 1 or 2 day reversal as this becomes overbought intra-week and then reverses back inside the range by the end of the week. If we start to break through here for whatever reason, it's usually, a backup plan, but if we break through here and we start to take out the 826.67, this is the second place we become, in this case, extremely overbought intra-week, and I'd be looking for that 1 or 2 day reversal, whether I'm short here already or not. And the final thing is you can look for that kind of bear flag breakouts. We pull back, we fail to get to the upper bound. Instead, you start to see momentum coming in. You can even look for those day trades in that direction. and I'd be looking for an intra-week sell-off down to the 687.40, which is the lower bound for this stock next week. Okay, moving on to ALB. This is a stock in the material sector. So we've looked at 2 XLE stocks. We're looking at 2 to the short side in XLK, and now we're going to look at 2 to the short side in the materials or XLB sector. So you can see we're starting to get the momentum down. I would not be surprised if this takes out this low, and the lower bound next week. What I would like to see is, I'd like to see this pull back, take out the upper bound. If we do that, we become overbought intra-week, and this is where I'd be looking for a 1 or 2 day reversal. We essentially enter the sell zone above the 83.11. And if we break through here for whatever reason, and we have real momentum to the upside at the 89.33, this is the second place I'd be looking for a 1 or 2 day reversal in ALB. If we start to break out intra-week, you move into the moving average, maybe just above it, and then you start to break down. That's the bear flag setup you can look at intra-week down to the 70.68. And the final stock to the short side is FCX, and this is a market in the materials sector. We are getting nice momentum down, so I'd like to see this pull back. If possible, I'd like to see this breach the 42.12, take out this high. This would be where we would enter the sell zone. I'd be looking for a 1 or 2 day reversal to the downside. The sell zone being between the first and the second upper bound. If we get real strength, for whatever reason, unexpected momentum in this, whether I'm short or not, the second place I'd be looking for this to reverse to the downside is the 44.25. And the third thing, of course, you can look at, as always, if we start to break out intra-week, you can look for that bear flag sell-off into, in this case, the 37.87. Wrapping up the video then with 3 to the upside, and each of these stocks are from one of the top performing sectors we looked at: XLRE, XLP, and also XLU. Starting with VTR, this is an XLRE stock, really nice trend to the upside. Any pullback in this market, especially if we breach the 61.06, we start to enter the buy zone. This is where I'd be looking for momentum to fade, lower time frames, and a 1 or 2 day reversal to the upside. If for whatever reason we break all the way down to the 59.26 during the week, and maybe I'm already long, this would be the second place I'd be looking for a 1 or 2 day reversal and probably risk managing that first position. And the final thing is, if we start to pull back and we cross back over the moving average in the week, you can get that kind of bull flag set up into a 64.65. And again, if you're a day trader, you can just simply day trade these assets in these directions. Next is CLX. Now this sits in the consumer staples XLP, and again, a defensive stock which is outperforming, which is benefiting from the risk off that we're seeing coming into markets. So any pullback below the 159.80 in Clorox next week, this would be an opportunity to start to look for a 1 or 2 day reversal to the upside. If we break all the way down to the 154.86, this market becomes extremely oversold intra-week, and that would be the second place, whether I'm long or not, I'd be looking for a 1 or 2 day reversal to the upside. And of course, if we just pull back, don't be surprised to see this, maybe even fail to take out the lower bound, and you get that kind of bull flag breakout intra-week into the upper bound, the profit taking target at the 169.69. And finally then, AEP, which is a utility stock, sits in XLU, and again, a defensive stock in a defensive sector, which is benefiting from this risk off we're seeing in the stock market. So any pullback in this market, I'd like to see it come down, trade below its moving average, and breach the 99.37. This market would become oversold intra-week, and I'd be looking for a 1 or 2 day reversal from this kind of buy zone. If we go all the way through this buy zone and take out the second lower bound, this is the second place I'd be looking for a 1 or 2 day reversal to the upside, whether I'm long already or not from the first lower bound. And finally, because it's a strong stock, you may just see it breaking out intra-week. You go back above the moving average and you get that kind of bull flag set up into the prior high and also onto the 104.72. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge- platform is included with every GMT membership.